mostly you would have seen there have been concerns of, governance in certain companies. And we at Quantum, we've always believed that to be the biggest hurdle or important decision making point to invest. That India is a great opportunity. If you remain invested in India for the next 10, 15, 20 years, as it has been for the last 10, 15, 20 years, you will compound your returns and wealth in a very good manner, subject to you being aware of the risks of liquidity, the risks of governance, and the risk of, what we call reputation and headline risk. And that is very, very important to note. And given that at Quantum, we always have managed it, that's why we call our strategy value investing with values, which means it has an integrity screen to sift out certain managements, certain businesses, certain sectors where we do not believe we have a very good view on the management or on the business or on the sector to be able to protect minority investors over a long period of time, because we are long-term investors. So we stay away. It hurts our performance when such companies, such sectors do well, but it also benefits us when there is a period of, scrutiny. A major investors are looking for, where is the other risk, where are the other governance risks. That period tends to be better for us, and better for general investors also. When as the ecosystem gets better and investing, you get more confidence in investing in different kinds of managements. That same thing applies when people invest in index, right? So index investing in ETF is a great way to participate, very low cost, it's easy to understand, easy to replicate. But index companies or companies in the index also have this issue of governance, right? How do you deal with, those kind of things? So like when we tell this to global investors like pension funds and sovereign wealth funds who are fiduciary investors, that they can happily invest in an index, but how do they manage risks of, reputation and governance? And so that's like another thing that investors also have to think when they allocate to India over a long period of time, which also plays out to not only in our value with values fund, but also in our what we call the ESG or responsible returns product, where governance is the largest allocation. It looks at environment, social, and governance, but 50% of the weight in the way the ESG fund picks stocks is based on governance. And as markets reward and see that companies with good governance generally tend to have long-term returns, and it's much more kind of, I won't say safer, but confidence of investors is higher in such companies. And then the thesis of, long-term investing with companies in good governance should do well. So that's the way we think about investing. We think about markets. I think, but we don't believe that such incidences or instances generally takes away. It's not a message against India, right? And investors realize that there are enough companies and opportunities and growth in India for the long period of time, subject to being aware of what kind of risks that you're taking on. So I think these generally, if you see, we will still believe that India is will attract more capital. India's relative performance this year, or at least in the last 6-7 months, has been lower. India has had an outperformance against emerging markets, against global indices for the last 2-3 years, but now we are seeing that underperformance. What we actually believe is that as India underperforms relatively, the chances of foreign investors again reallocating back to India remains high, and we should wait for that, look for that, and I think that thing will play out as the economy keeps its upturn in the months and years to come.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.